All right, ladies and gentlemen, welcome back to the channel. It is that time of the year to go over the Santa Claus rally. What is it? Are we going to get it? Are we already getting it? How high could we go? And what do you need to know about this term that you've probably heard before, the Santa Claus rally? What is the historical performance of the Santa Claus rally? All of that will be answered here in this video. I will also provide kind of my perspective on where I think AMC stock can go. So hit that like button and subscribe to the channel. Let me know what you guys think down below in the comment section. Are we getting presents or are we getting coal this year from the big man? Let me know down below in the comment section. So first things first, the Santa Claus rally. If you've been in the markets for a while, if you've been in the markets for a full year during this time of the year, then you would know what a Santa Claus rally is. Santa Claus rally is, as it sounds, a rally in the markets based on a couple different things. Now, according to Investopedia, a Santa Claus rally is the sustained increase in the stock market that occurs around the Christmas holiday on December 25th. Most estimate these rallies happen in the week leading up to the Christmas holiday, while others see trends that begin Christmas Day through January 2nd. Theories that explain a Santa Claus rally include end-of-the-year tax considerations, a general feeling of optimism and seasonal happiness on Wall Street, and investing holiday bonuses. Some institutional investors settle their books and vacation during this time of the year, leaving the market to retail investors who tend to be more bullish towards the market. Key takeaways. The Santa Claus rally is the tendency for the stock market to increase during the Christmas season. Theories for the rally include increased holiday shopping, seasonal spirit, institutional investors settling their books before going on vacation. Like many market anomalies, the Santa Claus rally may be random with no future guarantees. Yale Hirsch, the founder of the Stock Traders Almanac, coined the term Santa Claus rally in 1972. He defined the time frame of the final 5 trading days of the year and the first 2 trading days of the following year as the dates of the rally. These 7 days have historically shown higher stock prices 79.2% of the time, reflected in the S&P 500. The Stock Traders Almanac compiled data during the 70 years between 1950 and 2020 and showed that a Santa Claus rally occurred 57 times, with growth in the S&P 500 by 1.3%. Even last year, during the 2022-2023 Santa Claus rally, which included the final 5 trading days of December 2022 and the first 2 trading days of January 2023, the S&P 500 rose 0.8%. Now, it's important to note that in recent history, the markets have considered the Santa Claus rally as really starting after Thanksgiving until the first week of January. So it's now much larger, if you will, the time frame for a Santa Claus rally than it used to be, than the running theory for, Yale Hirsch, right, that looked at this data and founded this term in 1972. It's been pulled forward. So now we're seeing the Santa Claus rally sooner than what we've previously seen. And I think it really boils down to people tend to be optimistic. They tend to look at the next year as usually going to be a good year, and that tends to drive, money into the markets. Now, Tom Lee just put out an opinion piece on this as well. He thinks a zigzag will happen to a soft landing. He points out the October PCE report, which we got last week on November 30th, that was good. November jobs report will come out December 8th. November CPI will come out December 12th. And then the December FOMC minutes, or not minutes, but FOMC report comes out December 13th. He thinks after that, that's when the markets get this FOMO Santa Claus rally. So Tom Lee with Fundstrat thinks you could actually see a FOMO kind of rally in our markets. And I actually agree with that. Because why? Markets are expecting 5 to 6 rate cuts for 2024. Now, there's 2 reasons why the Fed cuts rates in 2024. One of them is the economy is weakening, and the narrative becomes we're heading into a recession. The Fed should cut rates to avoid that, avoid a hard landing. Second narrative is the economy holds up, and, the economy does okay, and we have a soft landing, inflation continues to fall, and that's why the Fed should be cutting rates. Now, simple as this. Odds of a 2024 recession. Financial services company TD Securities wrote in its latest forecast that it expects a mild recession for the U.S. in 2024. We put the odds of a U.S. recession at around 65%. Goldman Sachs is around 15%. The yield curve is at about 61%. The average consumer is at about 69% odds of a recession. The average economist is at 48% odds of a recession. Now, what's normally expected to happen doesn't usually happen. Now, I personally think we would see 8 to 10 rate cuts next year before we see a recession in 2024. That's because if you are a president running for re-election, you have never won a re-election if the economy is in a recession. That's because people vote based on their pocketbooks. William Taft was the only president that ever got reelected when a recession happened 2 years prior to, trying to get reelected. 5 or 6 other presidents have failed and lost their reelection attempts if a recession happened 2 years prior to a new election. That's because people vote on their pocketbooks. So you're not going to win the reelection if you are the current administration if we are in a recession. It's just not going to happen, okay? There's like almost a 0% chance that would actually happen. Because let's be honest, a lot of people know prices are high, but they're still employed. If they start to lose their jobs and prices are high, that's a problem. Really, when the TV, the average, media starts talking about a recession, that we're in a recession, that's when people start to say, whoa, that's why this and this is happening. That's why I'm struggling, right? The average person is not as financially inclined as you are if you are watching this video. So it's all about politics, really, in my personal opinion. I think a recession is highly unlikely for 2024. I think a recession is a bigger problem, potentially, for 2025. And I think that does fuel optimism of a soft landing. And these rate cuts are more so being priced into the markets because of inflation falling, not that the economy is actually deteriorating, that we are expecting a recession. But obviously anything can happen, and I'm not a fortune teller. Now, as you guys know, 2022 and 2023, they were not exactly great years for the average stock. That's because you are at record low allocations into markets. People were just not buying stocks. And the stocks people were buying were big tech names that actually benefit from the Fed raising rates. Something like an AMC, for an example, is not going to benefit from rates going higher. It's going to, that's going to be a drag on their business. Lots of small and mid-cap stocks that I have said publicly here on this channel that I am buying or invested heavily in. Fubo, SoFi, Snapchat, Crocs. These are all names that have some debt that are interest rate sensitive. They've started to perform better recently. Ever since I first talked about them like a week ago here on this channel, they're up 10 to 20% for a lot of them just in the course of the last week. The Russell 2000 was up over 2.5% on Friday. And your NASDAQ was only up about 1/3 of 1%. There was already a massive outperformance on Friday. And I think this is going to continue you really don't want to be under allocated to stocks in 2024. If anything, you want to be neutral or over allocated to stocks when rates are falling and if we are truly going to avoid a recession. So I think there's obviously a lot of moving parts when it comes to AMC. There's obviously a lot of shorts. I think the float could be sold short hundreds of times over again. That's my personal opinion. That's hard to say right now, and hopefully we get more data suggesting the stock is heavily short, right? More short than we currently can see. Now, I think there's really one area you want to be invested in right now. Interest rate sensitive companies, but quality. Low quality stocks are not going to, continue to do well, right? Over the course of the next 12 months, in my personal opinion. It's going to be high quality names. This is really a stock picker's market for 2024 and for the foreseeable future. I think AMC is higher quality today than it was before. I think dilution is obviously a problem. We just got dilution, so that opens up a window of maybe the next couple of months where we don't see dilution, and that could send AMC stock higher. Now, AMC on Friday was up 3.16%, up 0.15% in after hours. I think AMC stock could easily make its way into the teens again. Break above $11 per share as long as we don't get more dilution, which I don't think is going to happen. So I think naturally capital allocation heading into our markets as the Fed does start to cut rates as we get to January or February. You're going to see AMC outperform, but also the Santa Claus rally here in the near term should be positive for AMC stock as well and could easily send the stock probably back into the $8, $9, $10 range. As we've seen from the option activity, the $9 calls were very, very active on Friday. 80,000 of them were bought on Friday. That's a lot. So let me know what you guys think down below in the comment section. Hit the like button and subscribe to the channel if you guys have not done so already. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.